Hey, what's happening, guys? Dan Darrow here with an Options in Play video update. First off, thanks to all of you that stuck around for yesterday's option session. Just great that we have the opportunity to catch up twice a month. We talk options, obviously. We talk the market, talked all sorts of things. Including kind of a little bit of like game planning on how we want to maybe potentially approach some of these big economic events coming up. This week's CPI, next week's FOMC rate decision. So if you weren't able to make it, definitely check that out. And obviously, if you have any questions, let me know. All right. Um, so we didn't really go over this yesterday, but it was on the top of my mind today, and it's this idea of relative strength. Normally, people love relative strength, and I love relative strength as like a good trading indicator because it'll give you an idea where the money's moving, right? Like after like a 3 day, 4 day slide, it's really nice to see like where do people put money to work, or if the overall market's weak and you see a stock hanging green during the day, I mean that's a nice sign of relative strength, right? It's kind of like outperforming. Um, and it shows that there's maybe more aggressive buyers in that stock, which theoretically means that if there's more aggressive buyers in a stock, then that should hopefully translate better when things stabilize for the stock to trade higher quicker, right? So people love relative strength, or actually you could flip it and talk about relative weakness too, because it kind of like signals where the money's moving, and it could give like a nice future indicator of what to expect from that stock when things like stabilize or turn. Um, right now though, I'd say that like relative strength is really it's kind of like a tougher indicator because stock will have relative strength one day and then the next day it evaporates, or stock will show relative weakness one day and the next day it has a big bounce. So I feel like it's a little bit less clear of an indicator. However, if you take a step back and maybe look at it not from like a day-to-day basis, but over like several days, a couple weeks, then maybe it might be a little bit more useful. Meaning like stocks that have held in well compared to their benchmark throughout like the past 2 months, then maybe that is a better use of a relative strength versus like day in and day out, right? Like trying to pinpoint like when a stock is going to rally one day or the next. If you step back and look at it over like maybe like a month long stretch or 2 months, that could give a better idea, maybe set up some trade opportunities, right? So Apple, for instance, right? Everybody knows Apple. I don't need to go through it. But if you take Apple and you compare it to a lot of the other mega caps, or even just the Qs in general, right? The Qs are significantly below the 200-day, but also pretty much every single mega cap is below the 200-day as well, minus Apple. So compared to all the other gigantic stocks, this one is easily the strongest, right? It is not below 200-day. It basically didn't even test it. It came close, but it didn't actually quite get down to it. But you can see that it stands out as a relatively strong name. So that the thinking goes theoretically could set it up well to turn higher and move higher quicker when the overall market and specifically tech stabilizes, right? So on a more like micro level, like think about like Broadcom. Okay, maybe not the first chip name everybody looks at when they think about the semis, but Broadcom's been chopping around, hanging around. Basically, it's not really moving much, but that's actually a lot better than a lot of the other semis, which are for the most part weak and or breaking down, right? So AVGO chopping, spinning, right in kind of like a range between the 50-day and the 100-day. But when you compare that to the SMH, which is like the ETF I really track for the semis, well below the 200-day, broke down, put in like a new lower low for 2022, whereas Broadcom obviously nowhere even near that, right? And it didn't even come anywhere in the vicinity of its January low. When you compare that to say like Nvidia, right, below the 200-day, AMD, obviously below the 200-day, even like some of the other ones like Marvell, right, below the 200-day as well. So you can see even when you use it on a more like smaller level, just like focus on sectors, that there could be some like good indicators there, right? And it might not be a great forecast for what the stock is going to do tomorrow, but it could be more useful if you think about what the stock is going to be like 3, 4 weeks from now, maybe 2 months from now. If the market stabilizes, semi-stabilizes, and starts to turn higher, maybe these are the names that turn higher quicker because they're the ones that hung in better throughout the overall market correction, right? Um, So food for thought, something that was on my mind. I mean, I know I myself like to use relative strength and relative weakness, but I do feel like lately they've been a little bit less clear as indicators, and I was thinking that maybe it's because they're going to be more useful on a longer time frame. All right. So, if you like this video and you're looking for more information about swing trading with options, please follow up with the link in the description of the video for more information on options and play. Have a great night, stay well, and I will talk to you